Welcome back, and joining us on the show now is Ole Hansen. He's Head of Commodity Strategy at Saxo Bank. Ole, hi, thank you so much for joining in. And we want to talk about the global metal sector. And it seems there's a lot of confusion there. On one side, we did see prices gain after China stimulus measures, also US and China deferring their tariffs as well. But then when you look at supplies, inventories, they have been on the higher side as well. What is your sense on the overall metal as a sector for the rest of 2025 now?
Well, my overall sense is really that the themes that prevailed before this whole tariff war and shenanigans related to that started. But we were seeing an outlook for tightening supply of some of the key metals, especially those for the electrification, given what's happening right now, especially in China. And I think that will continue. But in the short term, the market simply just don't know what foot to stand on, simply because we still don't know the full impact of these tariffs and how they will impact some of the major economies, especially obviously in China, but also the US economy. And that has left us kind of listless here, range bound and struggling to find direction. In addition to that, if you look at a key metal like copper, we still have the premium between New York and London ebbing and flowing. It recently hit a high of around 16%. It just dropped down to around 7-8%, and now it's moving back above 10%. And that's really creating most of the volatility we're seeing in the copper market for now. So generally, I would say the words best to describe the markets right now is confused.
Well, it clearly has been that. But when it comes to copper especially, and since you spoke about that, while yes, electrification is an area where we are looking at a lot of copper demand. But on the other side, the International Copper Study Group also has forecasted copper surplus in this year and in 2026 as well. How have you analyzed those numbers?
Well, that is obviously an interesting development. But I think just overall, if we see how the say the Chinese economy, how they're becoming more and more electrified, we will see that trend continue in the coming years. So I'm probably a little bit hesitant to jump to that same conclusion. Obviously, I'm not the expert compared to these forecasts, but I think generally we have seen how copper throughout the last year, despite some of the worries that related to the setback in China to the property market, the copper has actually held up very well. And it does indicate to me that the underlying demand remains strong. Inventory levels right now are being shifted from the rest of the world to the US ahead of tariffs. That copper is going to create a surplus in the US, but tightness elsewhere, which I think will also help underpin prices. So I'm still optimistic in terms of prices in the coming years, simply because miners need higher prices in order to feel incentivized to continue to increase production, which we believe is still the base case for the coming years.
So $10,000 a ton is what the miners need to mine out more copper, and $12,000 is what you said as well. Moving away from copper and coming for gold then, and I do remember your forecast of $3,500 an ounce by the end of this year, which we've seen already happen in the first quarter of this year. How would you look at the gold prices from here, let's say, for the next 6 to 12 months?
I would have to say higher, simply because the demand from central banks is ongoing. That will continue. And the fiscal debt concerns in the US, if anything, has only been strengthened recently. We saw the spike in long-end bond yields last week, and then we have to remember right now, rising yields is poisonous for the US economy. So where the normal behavior in the market was rising yields would be negative for gold, we're actually seeing that as a positive. So I think the combination alone of central bank demand and worries about the fiscal debt situation will be enough to underpin demand for gold in the coming months. So right now we reached our year target at 3,500. So we're not that aggressively bullish at these levels. But I do note that the last month we've had a correction which was very healthy. We're seeing it seems like we are starting to roll over a bit now that the market is pointing higher once again, and that leaves the door open for higher prices. But I think at this point in time, we probably need a trigger because a lot of you can kind of say gold-friendly news has been priced in. So we need a trigger to occur somewhere to move that needle a bit. That potentially could be a stagflationary scenario in the U.S. becoming more apparent as we move deeper into the year, and we start to see the negative impact on the economy from the trade war. So that potentially, to me, could be the next trigger that gives us an additional push to the upside.
One of the triggers for the gold prices to go higher could be the decline in US dollar index. We've seen it come down all the way from 114 to almost 98 at these levels. It's trading at a one-month lows right now. Do you see further decline in dollar index? Because that absolutely could be a trigger into buying many of these commodities.
It just looks like that the trajectory for the dollar points to lower. It hasn't really got many friends. A lot of people would like to see it, including Trump, would like to see it lower, but obviously in an organized and well-functioning manner. Not we have a panic style situation, but the world as we see it right now points to the need for a weaker dollar in the coming months and years, and I think that will happen over time. We just recently saw how there was a quick move in the opposite direction, and that's clearly what will happen when the bets against the dollar becomes as one-sided as they have been for a while, with an overwhelming speculative interest to be short. That does create these periods of volatility, but I think overall the direction for the dollar is towards lower prices in the coming years.
Since we are talking prices and directions, what's also your sense for the silver prices? Because while the industrial demand has been good, we're also looking at a deficit for a fifth straight year. But would you say that much needed impetus for the silver prices to run up from here or break out is still missing?
If gold can stay here around this close to the 3,500 level, I see no reason why we should not have a go towards 40 later on. But we need some clarity on some of the factors you just mentioned yourself. And once we get that, I see no reason why silver can't do some outperformance once again, relatively to gold with a ratio around 100. It's historically quite high. So silver at this point in time, I would say, looks relatively cheap. But we need the trigger. We need some economic. We need to see the economic outlook stabilize, and when that happened, then I would still be looking for silver to move up towards the $40 level.
Ole, as we wind down this conversation, a final question on Indian demand for gold. And while we do see concerns with China and US and within Asian markets, though, India really seems to be shining quite bright. And the kind of demand outlook and growth that we're looking at is quite on the positive side. What has been your sense on Indian demand for metals?
Well, India is a country that's going places. In Europe, it's Poland, but in Asia, in your part of the world, most certainly India. And increased wealth and given metals as a historical, how it's used historically by individuals, then if we are seeing increased wealth generation, then metals will be part of that story. So with that in mind, I see no reason why we will not continue to see robust demand from India. And if we add to that China, then we have some really strong engines that could drive prices forward in the coming years.
All right. Well, that point is well taken. So a confused metal market in the global sense. But for the Indian markets, the demand growth is quite on the stronger side. A buy strategy continuing for gold and silver as well. And the dollar could see a further decline there. Ole, as always, thank you so much for joining us here at CNBC India. And with that, it's a wrap on Bazaar. Chartbusters is coming up next.